In today's video, we will talk about how you could invest your $1,000 in 2022 so you can make better financial choices for yourself. Before we get into the video, don't forget that we have a bonus fact waiting for you at the end. Number 1. Use a robo-advisor. If you want to invest $1,000 as passively as possible, using a robo-advisor is your best option. Robo-advisors automate your investing strategy by investing your money into assets that match your long-term goals and risk tolerance. Typically, robo-advisors invest in various stocks, bonds, and exchange-traded funds or ETFs. Many leading robo-advisors also offer features like portfolio rebalancing, dividend reinvestment, and even tax loss harvesting. Unlike many human advisors, many robo-advisors have funding requirements under $1,000. In fact, some robo-advisors have a $0 account minimum. This makes them beginner-friendly and ideal if you want to invest $1,000 or even less. Number 2. Invest with an online brokerage account. If you prefer DIY investing and don't want to pay robo-advisor fees, you're in luck. The past few years has seen a rise in online stockbrokers you can use to buy individual stocks and ETFs to create your own portfolio. Plus, many stockbrokers don't charge commissions on stocks or ETFs, meaning your trades don't cut into your starting investment. Like choosing a robo-advisor, finding the right online stockbroker takes some research. For starters, check what account opening bonuses are available for the stockbrokers you're considering. Investing platforms are willing to pay for your business, so you'll often find that platform award free stocks or cash bonuses for opening and funding a new account. You should also consider how frequently you want to trade and whether investing in fractional shares is important. Fractional shares let you invest with a small amount of money, so you can still invest in expensive stocks like Amazon or Alphabet, Google, without buying entire shares that may cost more than $1,000 apiece. Number 3. Invest in real estate. Investing in real estate used to be prohibitively expensive. You generally need serious capital to buy a rental property. Plus, many crowdfunding websites are only open to accredited investors, which require having a net worth of at least $1 million, an annual income of $200,000, or an annual income of $300,000 for married couples. However, you can still invest in real estate with $1,000 or less, thanks to real estate investment trusts, or REITs. REITs only invest in income-generating properties through purchasing real estate, providing loans, or buying pre-existing mortgage contracts. REITs are also required to pay at least 90% of profit back to shareholders in dividends. Ultimately, this 90% requirement means REITs are an excellent way to diversify your portfolio with real estate and to earn dividends. Plus, you can start investing in real estate with companies like Diversify Fund with just $500. Number 4. Peer-to-peer lending. If investing in the stock market or real estate isn't appealing, another option for investing $1,000 is to use peer-to-peer lending. P2P lending, also called person-to-person lending, involves lending money to individuals or business owners, almost as though you were a bank underwriting a loan. In exchange for loaning money, you receive interest payments. How much you earn depends on the level of risk associated with the loan and the length of the loan. P2P lending is ideal for investors more comfortable with risk because if a borrower defaults on their payments, you lose your capital. In order to reduce risk, many P2P lending companies let you buy notes, which are shares of individual loans. By spreading out your investment across multiple notes of different risk levels, you protect yourself from having a single borrower default and losing your entire investment. Number 5. Invest in small businesses. If you're looking for a relatively safe investment you can turn to for your retirement planning or other long-term investments, you've probably considered investing in bonds. A bond is a debt instrument that helps businesses and governments borrow money. When you buy a bond, it's essentially an agreement that you're funding a loan for a specific amount of time. Bonds have a fixed rate of interest payments, and once a bond term ends, the borrower pays back the entire principal. Generally, bonds are a safe investment because the chance of a borrower, like a government body, defaulting on a loan is low. Municipal bonds, which are issued by states and local governments, are also relatively safe. Finally, corporate bonds are the riskiest type of bond because they are issued to corporations, which have a higher chance to go bankrupt than cities, states, or government entities. Despite their safety, there are several disadvantages to investing in bonds. First, bonds have a lower rate of return than stocks on average because of how safe bonds are. Plus, bonds can have long-term lengths, meaning you're locking up your money for years at a fixed rate of return. If inflation increases, your bonds can actually lose you money. And if you need to sell your bond before its maturation date, you typically pay a commission fee and markdown, which reduces your sales price. Bonds are still a worthwhile investment if you're willing to accept their fixed income and don't need your $1,000 for the course of the bond's term. Number 6. Alternative investments. Many investors rely on traditional investments like stocks, bonds, and ETFs to build wealth. This is largely because these securities are accessible, don't require much starting capital, and are more easily understood thanks to research tools and analysts' commentary. In contrast, alternative investments are a less common, riskier investment option. However, if you accept a lower level of liquidity and more risk, alternative investments are a viable option to invest $1,000. Granted, alternative investments aren't for everyone. Typically, these investments are less liquid and more volatile than traditional securities. If you're a cautious investor, sticking with a robo-advisor or real estate are likely better choices for investing $1,000. Number 7. Starting an online business. One of the advantages of making money online is that there are usually few barriers to entry. After all, as long as you have a reliable internet connection and computer, the online world is your oyster. Starting an online business isn't different. Unlike traditional brick-and-mortar businesses that have expenses like rent and employees, many online businesses require minimal startup capital and have low operational costs. Plus, there are numerous online business ideas that cater to different skills and industries. Start by brainstorming business ideas that cater to your existing skills and sound enjoyable. Once you pick up an idea, treat it as a side hustle outside of your main job and grow it over time. If the money you earn from your side business begins to scale, you can even consider quitting your job to go all in on your business. Number 8. Buy a course. If you're looking for another way to invest $1,000 that's different from investing in regular securities, putting the money toward your education is an option that has life-changing potential. Unlike a college education, which generally costs tens of thousands of dollars, you can find affordable online courses on any subject to expand your skill set. If you feel like you're not getting traction in the job market or want to learn a new skill for a business idea you have, online courses offer a solution. Thank you for staying with us this far. Here, it's now time for the promised bonus fact. Buffett started buying shares of the Washington Post Company, now known as Graham Holdings Company, in 1973 and spent $11 million in total. By the end of 2007, Buffett's Washington Post stake had grown by more than 10,000% and was worth $1.4 billion. By all accounts, Buffett's Washington Post investment was a smashing success, but here's the kicker. The Washington Post's stock price fell by 20% after Buffett's investment and stayed at that level for 3 years. What investment method do you think is better suited for you? Let us know in the comments below. This is it for today, dear viewers. We are now at the end of the video. Don't forget to leave a like and comment before leaving, and of course, subscribe for more. See you next time. Bye!